Hi, this is James Shug with Westpac London's end of day report for Wednesday, September the 5th. Look, it was interesting day in markets today, not so much for the economic data that was released, but for the leaks that we had from the European Central Bank. So I'll get through the data quickly. First, there was a minor New York area factory survey, which was soft, like most other surveys have been, covering the US, both regional and national ones, for the middle few months of the year. We saw productivity data revised a bit higher in the US. The Bank of Canada kept interest rates on hold at 1% and maintained their mild tightening bias. That's with the expression, some modest withdrawal of the present considerable stimulus may become appropriate. In Europe, we had the revised August services PMI downwards, which meant that the composite factory services PMI was revised down from 46.6 to 46.3. It was weak, but it's even weaker now, and that adds weight to the view that we might see a further deceleration in European growth, or a further deceleration in the economy, the pace at which the economy is. Sorry, I should put that another way. We may see a faster pace of contraction in the Euroland economy in the third quarter than the -0.2% pace that we saw in the second. Also, in July, retail sales across Euroland were down 0.2%. In the month, and down 1.7% compared to a year earlier. That was a weak report too. But this is the really good bit. Interesting bit. The European Central Bank is going to announce tomorrow at the press conference following the council meeting an unlimited but sterilised bond buying plan. A rate cut apparently is not on the table. Now this is from central bank officials, unnamed, possibly a deliberate leakage of information to avoid market volatility on the day. But basically what they've said is that the ECB will buy the sovereign bonds of countries like Spain and Italy once those countries ask for bailout assistance from the bailout fund, which will hopefully be the European Stability Mechanism, which will come into existence if it's approved by the German Constitutional Court next week, and in exchange for fiscal commitments from those sovereigns. And under this plan, according to these officials, the ECB could stop buying or even sell the bonds they've purchased if they felt that the deal wasn't being adhered to by the sovereign. But what's really clever about it is that Draghi will be able to claim that it's a sterilised bond buying plan, that it doesn't involve printing money or increasing the money supply to buy the bonds, because for every the value of the bonds that they buy, they're going to take deposits off the banking system, so that the amount of cash in the system isn't changed because of those bond purchases. But of course, just over 6 months ago, the ECB lent €1 trillion to the European banks. That wasn't sterilised. In other words, they didn't take €1 trillion back off the banks. Some of it did end up back at the ECB eventually, but some of it went out into the economy. It bought sovereign bonds, it did a bit of business or what have you, and that money doesn't get repaid for 3 years. So when you look at what Draghi has done as a whole, late last year, earlier this year, he put in place measures, unsterilised but repayable in 3 years' time, to support the banking system. Now he's about to announce measures to support the sovereigns. The measures to support the sovereigns are sterilised. They don't involve an increase in the supply of money, but when you view what Draghi has done as a whole, his measures to support the European banks and sovereigns effectively involve an increase in the supply of money. They're effectively unsterilised when you view them together. That's an important point, because if Draghi had announced an LTRO at the same time as announcing the bond purchase plan, people would blatantly see through it. as a blatant example of effectively trying to monetise government debt or to finance governments. The time gap makes it much easier to claim that this is a separate operation. It's not about financing governments. I think it's damn clever. It may be serendipitous that the banks really needed help when they needed help, and it was appropriate to wait longer before the bond buying plan was announced, so as to extract the maximum austerity, if you like, out of governments. But when you put it all together, it's just the same, with some detail and motivational differences, as the quantitative easing that we've seen in by the Fed and the Bank of England. That's my view. I'm sure a lot of people are going to debate me on that one. Okay, so to markets today. And sorry, for some of you listeners out there, viewers, that might all be a bit technical. Sterilised or not, what does it matter? The point is the ECB is doing a lot. In fact, Mario Draghi, 3 rate cuts, saved the banks, trying to save the sovereigns, and all in 10 months. Good on him. Right, in terms of markets today, the commodity markets I'll do first. Gold prices are down 0.1%. We're looking at $1,694 an ounce. Oil pretty much unchanged at $95.36 a barrel. And copper's up 1.7% today at 352 cents a pound. In Europe, the markets are closed with the London market off 0.25%, the French market up 0.2%, German market up 0.5%, the Spanish market up 0.1%, and the Italians are down 0.6% today. And the Dow is pretty much flat at the moment at 13,039. Oh, we had a German bond auction. It didn't go off too well. I think that could be seen as a sign of risk on. So at the same time, Spanish bond yields came down today, Italian bond yields came down, effectively German bond yields are pushing higher. So we are seeing already, or we're continuing to see a response which is consistent with markets believing that the ECB can actually do something to support the sovereign debt crisis, or to ameliorate it. Aussie dollar, it's at 1.018 against the US dollar. It's been wobbly today, but with a weaker bias. We had the Aussie GDP numbers out yesterday. 0.6 was the second quarter result as we expected. Some signs of softening in the third quarter coming through. It's employment for August. Today we've got a 5,000 fall in jobs forecast and a 5.4% unemployment rate. So our forecasts are a bit weaker than the consensus. Okay, that's it for today. Back tomorrow with what Draghi actually said rather than what 2 colleagues unnamed said he's going to say. You've got to be careful here because, of course, the council meeting hasn't actually taken place yet. So the anything can still happen, and I'll report on it when it does.